Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, so I talked a little bit about this last week. I actually did a live video at one of my properties, and I was talking about the property and the property manager and the need to take a different direction. We hired our original property management company. They were managing two properties. We then eventually got rid of them and got a new property management company, and that new property management company has been doing excellent. It's been a night and day difference. So Andrew McGregor said, hey, I'd love to have you talk about asset management, because it's a topic that really is ignored. It's ignored a lot, and it's a good topic to talk about. Everybody talks about the acquisition, the raising money, like all the cool stuff, right? Asset management is a topic that's ignored, well, because it's not quite as sexy, I think. So I want to hit on that a little bit. Now, Andrew said, look, what went wrong? What were some of the red flags? And, basically, why did you make that change? And here's the truth of it. I mean, a lot of things kind of went wrong, and I'll discuss some of those as we go here. I'll start off by saying that decision is really difficult, and I'll put it on myself. I took too long to make the decision to make that change with this company, and so that was difficult in itself. So what went wrong? Here's some things that I guess were going wrong. A lot of promises that weren't being kept. I think the biggest thing was probably the difference in vision, right? My vision was this level. Their vision was a lower level, a different level. I don't want to call it lower, just different level. Their expectations of how to interact and treat tenants was different than my expectations to interact and treat tenants. So those were big differences. Their expectations for, doing renovations was different than my expectations for doing renovations. The other thing was the training. I have on-site staff at these properties. I have property manager or on-site property kind of manager that oversees. I've got then a leasing agent. I've got two maintenance people, and they had a very difficult time finding people full-time, so we often used temp people. We went through 5-6 different people through that time, so a lot of turnover, and that creates volatility in multifamily. So granted, you do need turnover if you've got bad people, but we also want to ensure that we're getting good people. As we went, I found that there was a lack of training. My staff wasn't being trained properly. And that was a big thing that really made a difference, is the new company has taken over and really trained well. They've been very hands-on. They haven't ignored the current on-site staff, and so they've really been a team working together, and that was something the other property management company just didn't do. They weren't a team. They were relying on the on-site to do everything, and they weren't giving them the tools, and they weren't actually, even the tools that they did give them, they didn't teach them how to use those tools. So that was really a kind of another red flag. The last thing I would say is just the coordination with me, with the on-site, with the contractors was lacking. Again, I think it was that they expected everybody to know their own positions and roles, and just expected it to kind of happen and fall into place. And that's never the case, right? You've got to have a property management company that's going to be a good leader. So those are some red flags, if you want to call them that, we found. The change was needed. The change really was needed 6 months prior. But again, change is difficult. I knew that when we made the change, we would see some negative impacts. So, and when we did, we had poor performing properties at the time, but that was in part due to the renovations that we were doing. So we had occupancy at like 85%, and we dropped down a little bit. And then it took us several months before we really had traction. And it was a little while there. I'm going, oh man, did I really make the right decision? Because we're not seeing, not that it didn't make the right decision. I knew I made the right decision as far as management, but I didn't know if that decision was going to see the positive changes I was hoping to see, and thinking, oh man, I wonder if it's just the location. I wonder if it's just the property. And since then, we've seen positive, very positive movement. We've went from low occupancy, I think I said 85. I think we're actually at 78%. And now we're at 92% between the two properties. So we've seen a massive increase, small period of time. That's been just really impressive. And the staff, the energy, everything there has really been a big difference. So I try to make these videos short. I don't want to keep on going on, but I do want to talk more about this topic. So I'm going to be talking about asset management probably for the rest of the week here. Some of the things that I've learned, some of the mistakes I've made, and really bring on maybe some other people to like help with their experiences and show us too what they've seen, because everybody is looking at it from a different lens. So Renee's asking, what key indicators do you look for besides vacancies? I mean, I think it's a lot of, look, vacancies are really important. Of course, rent collections are probably even more important, Renee. I mean, we want to see, 92% occupancy is great. If I've got 92% occupancy and I've got, 10% economic vacancy up on top of that, that's really poor. So we want to make sure collections are being done. What are they doing? We also want to see the metrics on who's coming into the apartments and viewing and showing, and what is our traction rate? How many of those are actually applying? What kind of callback rates do we have? So we're looking at that. We're looking at relationships with tenants. We're looking at reviews from tenants. We want to see that we're getting positive reviews, positive feedback from our tenants. We want to see that our tenants are building relationships. I want to see that we're actually getting lease renewals. Lease renewals really tells me that my on-site, my regional, is actually doing their job, right? If I've got a ton of turnover, let's say I've got 60% turnover and the market is only 40% turnover, that means we're doing a really poor job at actually management, at actually building relationships, at keeping and retaining tenants. So we really want to look at that. We also want to look at our expenses, quite frankly. I mean, what are they doing to curb expenses? Expenses are controllables, and we want to make sure we can control them. So what are we doing to make sure we're controlling expenses? And what are we doing to make sure that our maintenance is getting done? How many maintenance requests do we have that are out there? I was talking with my regional manager, and they're managing another property, and they had over 400 maintenance requests when they took over. 400 maintenance requests that were sitting in the queue, and they hadn't been answered. These are old requests, not just that day. So we want to make sure we don't have a big, backlog of requests in the queue. How quickly are those being taken care of? So I think those are really, good indicators to be looking at. There's definitely more. We'll cover those this week. We'll cover, the hiring process. How do you find that right property manager? We'll cover, that vetting checklist, and we'll cover just some overall strategies on, asset management. What are we really looking for asset managers, as an asset manager, for property managers, and then communicating with our investors and all that kind of stuff. So I think that's really important. I'll try to hit as much information as I can. If you got any questions, type them in. Let me know. I'd love to hopefully answer everybody's questions on asset management, something that's just not talked about nearly enough. So let me know what you think. Thanks for joining me, everybody. Talk to you soon.